Hi, this is Roger Balzer. Welcome to our 2-Minute Tuesday for March 22nd of 2016. Our title for this week is The Dollar is Falling. Today I want to spend some time on the US dollar to kind of give you an update and a view on what I see from a technical perspective. First of all, you need to know what is the US dollar index. Basically, it's a weighted basket of major foreign currencies. When I refer to moves in the dollar, this is the index to which I'm referring. The US dollar index, it's been in existence since 1975 with only one change, the addition of the euro. Today, the US dollar index contains 6 component currencies: the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. Prior to the formation of the euro, the US dollar index contained 10 currencies, including the West German mark, the French franc, the Italian lira, the Dutch guilder, and the Belgian franc. Today, the currency weightings contributed to the price of this index are on this slide. That's why you see the euro index at 57.6%. This is the point and figure chart of the NYCE US dollar index spot. The symbol is DX/Y. And on December 2nd of last year, the dollar began a decline that reached near about 5% right now. What once was considered a small pullback has actually turned into something more meaningful. There's been a trend change. On March 17th, St. Patrick's Day, the dollar index violated its positive trend line, breaking a double bottom at $95, and this move shifted the trend to negative for the first time since August of 2014. Now, while in a positive trend, the dollar managed to gain 14.81% during that time. The traditional rising dollar assets such as U.S. equities, U.S. fixed income, they managed to produce positive returns as well. For example, the S&P managed to gain 2.14%. Large cap growth does a little bit better than value when the dollar is rising, was up 5.83% compared to minus 1.74 from the U.S. large cap value, and the U.S. core bond was up 0.39. Meanwhile, traditional falling dollar assets were primarily in the red. From August 25th of 2014 through March 17th of 2016, gold was down 1.49%. The continuous commodity index was down a whopping 26.54 index. Emerging markets was down 24.91, and the developed markets ETF was down 13.9%. Now, since the dollar peaked on December 2nd of 2015, we've seen some traditional falling dollar assets beginning to show strength. As you can see here, the top asset classes are mostly non-USA asset classes. Going forward, if we continue to see the dollar fall, we will need to pay close attention to the falling dollar assets, which typically include non-US equities, commodities, gold, and international currencies. Once again, we need to see some follow through and some confirmation. What you're seeing here is some strong direction. We've got some Latin America, some global incomes of all regions, the Pacific Basin minus Japan, global currencies, the start of the move. The Middle East is really starting to move, especially the African equity. Number one performing fund this year is actually Egypt, which is very, very surprising. You still have U.S. large cap value in there. These are the asset classes that are leading the race as of today, but I'm looking for a little bit more confirmation going forward. As I always say, when the charts change, we will change. If you have any questions about any of the investments you own or your 401k at work, just get in touch with me at 440-934-3114 or by email at roger@balzerwealth.com, or you can even send me a text at 440-610-3012. Until next time, make it a great week.